It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Monday evening already. Boy, that weekend flew right by. Monday evening, May the 2nd, 2016, cracking open a brand new month of May. It really is the 5th month of the year already. Boy, oh boy, time flies when you're having fun with the charts. We have another exciting newsletter for you guys tonight. We got crude, S&P, gold, and euro. Markets are looking quite volatile as we begin this month of May. Crude is bearish inside of a bear flag. E-mini S&P is bullish, but right up at the highs of a channel. Gold is bearish with an undershoot of the channel lows, and euro looks quite bullish as it tries to complete a triple measured move it started earlier off on Sunday night. Before we jump into today's charts, though, and look at the strategies we have for tomorrow, I do want to remind you, the only place to find the full-length version of this nightly newsletter video is on our trading blog here at Sideways Markets. If you're watching the video right now on our YouTube channel, make sure you subscribe to the YouTube channel, and then after you subscribe to the YouTube channel, follow the link in the description of the YouTube video and come over here to our trading blog at sidewaysmarkets.com. That way you can watch the full-length version covering all 4 of our markets, crude, S&P, gold, and euro. While you're here, don't forget, grab a free pass. Come join me in our trade room this week as a guest. You can grab a free pass in the upper left-hand corner. Don't forget to register as a member of our mailing list, your name and your email address, and then check your inbox. Verify your inbox, and I'll send you an email every evening when the newsletter is ready to be watched. Right below the video tonight, you can download all the charts you see me using in tonight's video. Follow that link that says click here to download today's charts. And over on the right-hand side, I'll encourage you to come out and join me as a trial member here at School of Trade. Learn more about what it means to be a student, learn more about our strategies, and see, of course, all the important details we offer here at School of Trade. And we always have someone standing by 24/7, 365 if you have any questions along the way. So don't forget to ask those questions if you need our help. Ready to rock and roll? Hope you had a great weekend, by the way. I know weather's starting to turn most of the places around this country, so hope you guys are doing well out there. Welcome back to the newsletter. Starting off tomorrow, Tuesday, May the 3rd. Boy, we got Cinco de Mayo coming up here this week. We got Mother's Day. I'm looking at you right now. Don't forget about Mom. That postmark better be put in the mail here pretty early this week if you want to have a chance to get it there by Sunday. Make sure you get that. Make sure you wish Mom a happy Mother's Day. And, of course, all the moms out there, definitely thinking about you guys this week. Now, looking at the calendar here for this week, we got Tuesday, May 3rd. We got some news out of China here tonight, 9:45 p.m. Eastern Time. Nothing too important out of China tonight. The big one's going to be tomorrow night out of China. We'll talk more about that in tomorrow night's newsletter. We get the Royal Bank of Australia get an announcement at 12:30 a.m. Eastern Time. So if you're going to be trading the Asian session, Aussie session, right, be on the lookout for an announcement from their bank, right, the Royal Bank of Australia. 12:30 a.m. Eastern Time. And kind of some small stuff here in Europe. We're pretty much blank here in the U.S. session tomorrow. And, of course, tomorrow night, we've got some big news coming out of China. So, really, the only major news on the schedule going forward is going to be from that the RBA announcement at 12:30 a.m. Eastern Time. So, if you're in Asia, obviously make sure you're aware of that. If you're in London, though, you'll be picking up scraps after that news number comes out. And, of course, tomorrow morning, in the U.S. session after 8 o'clock Eastern Time. We've got no major news on the schedule for pretty much London and U.S. session tomorrow. So pretty much a wide open schedule for us in the trade room tomorrow morning. We'll be opening up our trade room tomorrow morning at 8 a.m. Eastern Time. I look forward to trading right along with you guys as advanced members here at School of Trade. Let's kick this party off, though, here this evening, Monday through Thursday evening, 8 p.m. Eastern Time with our newsletter. Crude oil is bearish with a wedge and a measured move to work with this evening, which tells the sellers to be looking for traps at overhead resistance levels for the most reliable selling opportunities tomorrow. The bear wedge gives us a great medium-term target for tomorrow, but that double down support tells us that many of the sellers will probably take their profit here and give those buyers a chance to send this price higher in the short term. The bear flag at the end of the day tells the sellers to look for opportunities using traps at the highs and breakout pullbacks at the lows, and they have targets waiting at the measured move for the next leg down. Got a couple clues here, technical clues here on the chart, upper right-hand corner. Don't forget you can download all of these charts and have them on your computer for tomorrow. Follow that link below the video on the blog tonight. First of all is the bear wedge. First thing we see here, we get a bear wedge. Now, what do we know about wedges? Well, we know there's a directional bias to wedges, a little bit different than a triangle, right? Triangles are a little bit different, but wedges, we're looking to sell above the high on the way down to that wedge target. Wedge target 43.71. If we get down to that 43.71, we're looking for a double bottom before we really even go anywhere from there. After the double bottom, we look for the buyers to try to hold the pullback and get a reversal. If they can't hold the pullback, we look for it to collapse and continue. We'll know more about what's happening by then tomorrow. But bottom line is, whenever we see a bear wedge, we want to sell the highs, right? Sell the highs of that bear wedge. More importantly, though, look for traps. Look for traps. Look for traps. Looking for trap high, buyer failure into strength, strength into pullbacks, and pullbacks on the way down to reach that wedge target. So whenever we see a bear market, we're looking for trap high, right? Trap high. Find areas of resistance, find prior swing highs, and look for that classic example of buyers try to hold the pullback, they can't, buyers fail, failures lead to strength, strength leads to continuations or pullbacks, and of course down to targets waiting for us below. I have no idea where that trap high is going to occur. Remember, a trap high becomes a trap high when the buyers fail. Okay, sometimes they just blow right through it, hold a pullback, and they keep going, and then we get the trap high. So always a little bit of a guessing game as far as which of those areas of resistance overhead will be the ones that are going to give us the best results, right? We'll wait and see proof in real time. Next clue is a bear flag right now. Bear flag, push lower, flag goes out. Most important thing you want to remember about a bear flag is stick to the downside, right? Stick to the downside. And ultimately, there are two spots for it. One, we're looking for a trap high to sell the high. Two, we're looking for a breakout pullback. Breakout pullback. Sell the high. Don't sell the low, but break down the low, close outside, breakout, pull back. Those are going to be the two most obvious and most reliable, I should say, opportunities here to trade a flag. And then don't forget, you've got your AB equals CD. That'll be your target on the way down, right? So here's your flag now, right? There's your flag. And so looking at this now, you guys know what to do with it, right? Bull trap at the high, breakout, pull back at the low, and then, of course, measured move on the way down. Second clue here, double down. Take those first two swings, double them up, right? Double down. This double down support's pretty important, okay? What usually happens in a bearish market at support? Sellers take their profit. Buyers try to pick a bottom. So we expect to see buyers enter the market at a double down. What does that tell you? That tells you look for a move back above a swing, right? Trap and go. Bottom line is double down acts as support at 44.71. What's the best way to trade short when you've got a big level of support in your way? Either get away from it, right? Price has to rise so you're not selling into support, or you want to see price break down, pull back, and hold that support now as resistance, right? So the best way in a bearish market, if you want to trade through support, is either get the hell away from it, get up above it, right? So you're not selling into support, or break out, pull back, turn that support into resistance. Last but not least is the measured move. Last but not least is the measured move. Measured moves are pretty easy. AB equals, wrong button, AB equals CD. There's your measured move target. Measured move, 44.36. This will be an area of support below us, and if we get below it, it becomes an area of resistance. Now, measured moves are very similar to any other area of support. Okay, let's assume we just slam lower here and we hit the measured move right now. A lot of new traders, I was one of them, my hand is raised too, would think, okay, I'm going to try to use that support as a buying opportunity. But in all reality, though, you're buying a bear market. What's the best way to buy a bear market? Don't wait for it to become a bull market. Wait for it to get up above that moving average, right? Trap high, hold a pullback now, and stay. Once the buyers can hold a pullback, then we know we can rely on buying opportunities. So where I'm getting at with this is just like any other support, if we get to a measured move, what's most common is to see another leg right on through it. So don't try to buy a measured move just because it's an area of support. Okay? Keep the money in your account. Save it. You're going to need it later on, because after we have that double bottom measured move, then from there, that's where we look for the information. Do the buyers make a new higher high and hold a pullback? If they can hold a pullback, they take control. If they can't hold that pullback, okay, if they can't hold it and we crash back down, now we look for a triple measured move. The bottom line, though, is that after we test any area of support, right, especially measured moves, we don't look to buy it. We look for that double up. Then from there, where do we go? Do we stay above the measured move, hold a pullback? Great, we can be a buyer. Do we go back below the measured move and stay below it? Right? Great, we can now continue being a seller. The bottom line, though, is at the first test of that measured move, we're expecting to see a retest of it because of the market's inertia. The market's not going to stop moving lower just because there's a measured move in the chart. Okay, you're going to still see sellers that will keep selling right into it. Okay, so wait patiently here if you're trying to call a top or a bottom, right? We're not trying to trade against that trend. Let the market's momentum work for you, not against you. Now, what do the bears want to see? Pretty simple here going forward. What do the bears want to see? Now that you guys know all the basic principles of what's happening here tonight, we're looking for a buyer failure at resistance. Okay, so bears want to see buyer failure at resistance. There's resistance. Here's resistance. Okay, you get all these resistance areas overhead. Again, you get the top of that channel act resistance. A lot of resistance levels you can easily find. Okay, buyer failure. Break up, pull back. If they fail, sell it. Just make sure we don't sell it into rising support, right? Rising support going to be the flag low. Rising support or support double down, right? Measured move support. We want to wait for buyer failure. We want to sell, but we don't want to sell unless there's enough room for at least our first profit target, right? So don't buy into resistance, don't sell into support, okay? Now the hard part right now is we don't know which of these areas of resistance is going to be the one that fails. All we know is that we're looking for an area of resistance for buyers to try to hold a pullback. If they can't, right, we sell that sucker right back down. Don't forget the sequence, right? Buyer failure into strength, strength into pullbacks, pullbacks back to a new low. What do the bulls want to see? Oh, sorry, bears. Breakout, pullback below support. Breakout, pullback below support. Breakout, pullback below support. Okay, on the way down to that wedge target. So these areas of support, we need to turn them into resistance. Breakout, close below, pull back, hold it, and go. Breakout, close below, pull back, hold it, and go, right? Turn that support into resistance. Pretty simple so far. How about the bulls? The bulls, you guys have a tough one right now. Breakout, pull back above resistance, right? Breakout, pull back, hold it. Now that becomes a bull market. You can buy that with confidence. Just make sure you're not buying into resistance. Okay, what else can we do here? Double bottom reversal at measured move. Okay, test the measured move. This is called a double bottom reversal at a measured move, right? Remember we talked about this earlier. Expect to see a double bottom. Once you see that double bottom and you see the buyers hold, right? They hold that pullback. That's your double bottom reversal. Look for the measured move or any major area of support. Okay, it could also happen down here. Hit that wedge target. Again, don't just buy it here. It's gonna try again. Wait for the double bottom, hold the pullback, and go. Right? It's much, much more reliable after you see that second attempt hold. Then buyers hold a pullback and go. Okay, that'll give you the most reliable trades. I get this question a lot. Can I buy? Right? Can I just buy that double bottom? You can. Just make sure you're aware it's only a 50-50 win ratio. So make sure you have a 1 to 2 risk to reward on that trade, because you do not want to have a stop that's anything but half the size of your target, right? If you're going to blindly buy that measured move reversal without the use of a holding the pullback, right? In a bearish market, we want to buy after those buyers.